Good morning, audio update for the stock market. It is June 8th. It is 8:29 a.m. Eastern Time. There's very little change on the chart, so I decided not to give a video update. Probably will do a video update tomorrow, and then, of course, we'll have our weekly update on Friday, although I may delay it to over the weekend. Okay, so what we've got here is the stock market really not doing much of anything. It seems to be more of a lack of supply. The demand side seems to want to buy, and they have the upper hand. They are moving prices higher, but they're a bit cautious. They are concerned of paying too much. They're looking over their shoulder, wondering what might go wrong or right. My gut feeling is this is going to keep moving higher, and the model seems to be supportive of that thinking. But it could be a struggle. What I'm wondering is it time for a breakout where the market actually speeds higher? Don't know for sure. It's quite possible it's going to be a struggle higher all the way into the next more important sell signal here that's coming up sometime this summer, the level 2s and the level 1s. And so we'll just continue to follow our forecast we've done on the weekly updates of what we anticipate for the direction of this month and then the direction of next month, and how does that fit inside the long-term bull market. For the moment, I still see a net positive or bullish bias of the fundamentals, S fundamentals and the X fundamentals. The X fundamentals including the psychology, the mood, the sentiment of people. What do they really need to do? And sometimes they need to do things that are not in line with standard fundamentals in economics. Okay. Technicals look good to me. One thing I like with this slower pace rise is it's allowing the economy to catch up to the stock market. And I just feel like that's bullish, but I fully understand why some people are saying this thing is only coasting higher. It won't take much to knock it down. So as always, there's risk, okay? There's always something to go wrong. Right at the moment, I'm not coming up with much of anything that can go wrong. I think this market's moving higher. I think we're hours away from a record high, or at least a few days. And I'm going to stay with the plan that I've been showing you in the weekly update. So if you're not a subscriber, yes, I'm giving away some free stuff this morning, but you really want to subscribe, try it for a while. I mean, anybody who can't spend $28 a month for a couple of months, they probably don't deserve to be in the marketplace. Sorry if I hurt your feeling, all right? You got to spend money. You got to get ideas. You got to compare them to your ideas. Everyone has to build their own toolbox, but that toolbox can include people who offer some assistance, and that's what I'm doing. And it's worked very, very well for me for 30 years, and my 10-year rolling track record, and I'm like 25. Well, it depends on what program, what account you're looking at, but it can run 11 to 25% a year for 10 years. I know this method works, and I don't follow anyone else because I've been at it for so long. I do challenge myself and test myself by looking at samples from a variety of people, and then I'm looking at a variety of other methods that I'm not that confident in, just to see if it can come up with something different than what I'm doing. And that's proper thinking of how to work with a market. But most people do need that additional assistance and buy those signals, and then quite a few people actually need people to also manage the money. I'm willing to work at that as well. All right, let's take a look at some of the outside markets. Maybe have an influence on the stock market, but they may just be their own, they're doing their own thing. But some people like to diversify and get into some of those markets. So one of those, of course, is the gold market. And I believe we have seen a level 2 top, level 2 bottom, and gold's probably going higher for a couple of months now. All right. But until the violation of what it was, the last week's low, whatever the recent low that you can see where they snapped it down and then brought it back, that's probably a risk point. If it goes below that, we want to reevaluate whether it goes lower for just a week or two, or is it going lower for a few months? Okay. And there are alternate scenarios suggesting that can occur in gold. Right at the moment, I'm feeling a bit friendly gold. And part of the reason I'm feeling a bit friendly gold is that I'm looking at the interest rates and I'm coming up with something different that I'm going to explain in the weekly update. I'm going to shift things around a bit long term, and that can change the scenario going out into August. That can also impact gold, and it might be actually a bit supportive of gold. So we'll update that over time, but there is something different going on there long term for interest rates for this year. Now, the dollar. We know it looks like we called a bottom. It hasn't rallied much at all. It's already getting in the time frame for a fairly significant, well, it's the second most important type of top or sell signal in the dollar. We know that basically the analysis is suggesting to be long-term bearish to dollar for a few years yet, but we also know it can spend maybe a year at a time moving sideways or correcting to the upside. We may be in one of those. You know that I've been trying to be a little bit bullish into August on the dollar, maybe because of some of the interest rate stuff. But now what I'll discuss in this weekly update on Friday or over the weekend is maybe a little bit of shift in the dollar related to that interest rates. But keep in mind, the dollar's not trading just U.S. interest rates. It's trading global interest rates. It's also trading global currencies in the relationship, as well as inflation and commodities and this and that. Okay, what else can I tell you? Crude oil probably going to move higher into July, and then we will reevaluate, so I'll stay with that forecast. Bitcoin, I've been warning you there could be another slam dunk coming in Bitcoin. Well, it's off on my chart this morning. It could be doing that. It's not yet time for a significant or fairly significant bottom. So I think there's a little chance for Bitcoin to move lower, and then we will reevaluate. Bottom line is, just as I said yesterday, I think this whole inflation thing is now at risk of being overdone. I think we're about 1951 pulling out of a recession, got a big pop in inflation. And then if you look at the remaining years during the 1950s, sure, it slammed up to about 7% inflation. Then it just dropped to about 2 to 3% inflation. There was even moments of slightly minus negative. I think that's what we're in for this decade. Okay, so I think we've seen the highest in inflation this year. Now, maybe it's going to move higher into summer for the annual inflation, but I think we've pretty much dialed in a lot of this. I could be wrong on this, and this could be a significant headwind at times during this decade. But ultimately, because my super cycles are bullish inflation in the next decade, are bullish interest rates in the next decade, except recessions will knock down on inflation and knock down interest rates, okay? And we will have a recession someday. I think it's a long ways off yet, but we will monitor day in, day out till we get to that point, just in case something occurs a little earlier. Any rate, I give the stock market a long-term bull, thumbs up, 2 thumbs up even, but it could be a slow struggle here. And I do think maybe inflation's a bit high, real estate's too high, things like that. I think we're going to see some consolidation in commodities and some of the inputs into inflation by next year. But the point is we may start on that later this year. Hopefully that makes some sense. At any rate, on a very short-term basis, stock market, I would like to think the 5-day average is holding at least the June S&P 500 futures. Keep an eye on it. That may work for the cash as well. I'd like to see yesterday's low hold, and I'd like to see this market wake up now. It's been slow enough pace. I think it's trying to start pushing higher, punch out to a new record high. As far as long-term investing, in my opinion, you had a second most important type of intra-year buy a few weeks ago. You had a major long-term buy back in February and a second chance at it in early March. You may get another one here soon, so keeping a weekly update. Is it going to be soon? Is it going to be a ways out? And then, of course, for traders, you want to know of these intra-year sell-buy signals to help you with your trends. Regardless if you're just trading individual stocks, it's still good to see what the overall stock market is doing. Past results are not necessarily indicative of futures results. Please manage your risks when you're using your own analysis and that of others. Have a great day, and let's give this stock market a chance to work out here. Let's give the bulls a chance. Thank you.